Good morning from the For the CME. This is Chris Robinson with your Traders Exclusive comment today. What trades are we looking at in the grains? We've had a good bounce off the recent 5-year lows. Corn rallied 40 cents, wheat rallied about 47 to 52, depending on what month you're looking at. November beans had the best rally, about a 74-cent rally. Then we broke 30 cents. We've come back here. The key thing we're looking at as far as the grains, harvest has been delayed. Yesterday we came out, corn's about 20% later than it should be, behind the typical schedule. It's 31% harvested. It should be about 50. The beans turned the halfway point. They're a little over 51% done. This is important because as the harvest really gets into full swing, you'll see the pipeline start to fill up again. It'll take the pressure off the crushers who've been, in need of beans. So that market's going to turn very, very quickly. It may be an opportunity for you to take a look at, selling into this rally. Of course, you got to use good risk-reward parameters, but fundamentally, once this harvest gets done, we've got a good 10-day window where the harvest is probably going to get way caught up to where it should be. That should take pressure off these higher prices. It's giving you an opportunity. Secondly, on Friday, we have options expiration for November. November soybeans expire. There is a lot of open interest at the $9 level and $9.50 level. Those two areas may give you a trading opportunity to take a look at there as well. Typically, we've seen it year in and year out. Once the November options expire, we come in next week, and then the market resumes whatever trend it was doing earlier. If that's the case, we should see a bit of a break next week. So take a look at those strike levels, $9 and $9.50 in November soybeans. Lastly, with the cattle. The cattle's given us a lot of volatility recently. Go back and look at a chart for the past 2 weeks. We're near contract highs in the fat cattle and feeder cattle. Cattle is very, very sensitive to what's going on in the stock market. But usually when you get this type of volatility, it can be a sign that we're nearing a top. If you look at the chart for the cattle, we've had a hell of a run for the past 14 months. We're due for a correction. The best way to play that is to, if you want to step in there and sell it, make sure you've got tops, very tight stops so you don't get run over if this thing does have another leg to go. The investment money continues to want to own livestock. That's a positive. And we saw last week the gyrations. They wanted to own commodities and they sold stocks. The stock market broke 1,500 points. It's come back just about halfway. The S&P broke 200 points. It's come back more than halfway. So a 10% correction in the stock market. That's given volatility to the meats. Pull up a chart, the stock market against the meats, gives you an opportunity to catch some trades there. That's about it from the For the CME. This is Chris Robinson. Have a good day.